Hey, what's up, traders? It's Kante from the DesireToTRADE. Now, what I want to show you is... Hey, what's up, traders? It's Kante from the DesireToTRADE. What I want to show you in this video is what is an edge. Now, this video is going to be with an article, so you can read the whole article, which explains exactly what an edge is and how to get it. But I want to show you an example of this. So this is a video accompanying this article. Now, there's two ways to get an edge. And the first thing you have to know is that you do not need to have a bigger reward to risk to get. And the first thing you need to know is that you do not need to have a huge reward to risk to get an edge. Similarly, you do not need to have a lot of winning trade to get an edge. Now, an edge will simply mean that you have more money than you lose over a large number of trades. What an edge is simply the fact that you're going to have more winning. What an edge is simply the fact that you're going to have more money that you win than money you lose over a number of trades. It doesn't mean you're going to win the next trade. It doesn't mean you're going to win the trade after that. It just means that over a certain number of trades, let's say 10 trades or 100 trades, you're going to have more winning, you're going to have more profit than loss. Now here's an example. Two ways to get an edge. The first way to get it is to have a higher probability of winning the trade. So if you win the trade more often than you lose, and you control your risk, of course, then you're going to have an edge. We'll take an example. Let's say you're trading the Euro USD as this example, the daily chart. Now, what you could do is you could trade in a range, meaning you would be buying at a support, selling at a resistance. Now, there's a lot more ways to do this, and it's much more complex than it seems, but we'll just take an example. Let's say I would be buying at that point here. I would be placing an entry here. Then I would put probably a stop loss below. Now, you can see that this is my risk. Based on this amount, I would probably aim for the high at that point. Now, this would be my take profit. The thing here, this amount, as opposed to, is of course smaller than this amount of gain, right? But it's not a lot larger, right? You probably have not even a 2-to-1 of reward to risk. The thing is, in that case, since this is support, you're increasing your probability of winning the trade. You're increasing that this trade will work out, the probability of this trade working out. Now this is good, because if you do that all the time, and if you control your risk, you're probably going to have a bigger probability of winning than losing the trade. Meaning that over a certain number of trades, you're going to have an edge. Now the thing you have to be careful here is you always have to control your losses. Meaning if you don't stick and take profit, then you're going to have a problem, because you may have a high winning rate, but you're going to lose big chunk of money at some point. So if you control your risk and you have more chance of winning than losing, then you have an edge. That's obvious. Now, of course, what you want to have is a reward to risk of 1 at least, just to cover the fact that you would lose possibly this. So you want to gain at least the same amount, which would probably be here. Now, in that case, you would gain a little bit more. Now, in that case, we would gain a little bit more, but the point is you will still have a higher probability of winning the trade. Now, we'll take an example of another hedge, because this is not the only way to do it. The other way to get an edge is not to win more often than you lose. Instead, it's really about having a bigger reward to risk. So once you're going to win big chunk of money. And that's the point. You're still going to control your risk, meaning you're still not going to avoid putting a stop loss. You're still going to have a stop loss in place, but your reward is going to be much higher. For some sort of trade, you cannot always increase the probability. You can up to a point, but some sort of trade are more likely to not work, such as the breakouts. They're quite likely to end up in fake outs, which is a failed breakout. Now, what you would do in this case is you know that type of trade will work out only some of the time. So you know it in advance. What you would do in that case is what happened in this example here. We can define a range, and then we could wait for a breakout. Now, this is, again, much more complicated, and there's stuff you can do to increase the probability. But the point is this. you're gonna enter here. Let's say you're gonna put a stop loss around that level. Let's say. Now the question here: this trade has a lower probability than the trade we saw before, meaning that you would want to have more reward if you're gonna win that trade. So instead of just putting your take profit here at that level, you would get a 1-to-1 reward to risk. This would be good, but not optimal because your probability is lower to win. So what you want to do is you want to have a higher take profit. Instead of aiming for 1-to-1, you probably aim for 3-to-1 or even 4-to-1. You could go even above here. Now, since this type of trade doesn't work that often, you're probably gonna have a win rate that's smaller. But as you can see this example, and the example is in the article, if you have a bigger reward to risk, you're gonna still get an edge because over a number of trades, you're still gonna make a lot of money. So that's the two ways you can do it. Either the first way, you have a high probability of winning the trade, or you have a high reward when you win the trade. Now make sure that you apply this in your trading. Make sure that you know what your edge is, and make sure that the type of trade you're trading works with the edge you have. If you're gonna take trades in a ranging market, such as the one we saw before, and you want to have high reward to risk, this is not going to work. If you want to have low reward to risk and have a high probability of winning in breakout trade, this is most likely not going to work because there's some criteria that you have to follow. There's some things that do not work all the time. There's some specific trade that work more often than not, and some that give better reward but do not work all the time. So it's really important to think about this and to focus on this. So make sure you have the edge. If you found this video valuable, make sure you like it. If you find this video valuable, make sure you like it. It helps me a lot. And make sure you subscribe because I'm going to keep putting more videos out there. And check out DesireToTRADE.com. The article about this is there. You're going to see a lot of podcast episodes, a lot of great stuff. So check this out, and I'll see you soon.